What's up traders? In this video, I'll be performing a market forecast on gold. So stay tuned. Now this video is going to serve as my outlook for gold for the month of July 2025. And without wasting any time, we're going to kick things off here on the daily time frame. Now, the best way to describe gold for the majority of 2025 so far is very, very bullish. At the turn of the new year in January 2025, at this point, we can see that price action has been in a very aggressive bullish uptrend. That is up until Tuesday, the 22nd of April 2025, when price action printed a new all-time high, which on this specific price chart is quoted as $3,500 per ounce, which is obviously a significant key level. And shortly after printing that new all-time high, price action very quickly settled into a state of consolidation, which at the time of recording this video, it is still in. Given the overall bullish nature of price action in 2025, it's no surprise that our daily time frame is currently pointing bullish as well. My last major daily break of structure is all the way back here. I have my daily strong low located here, as this is the starting point of the impulsive phase which helped generate that external break of structure. And at the time of recording this video, price action is still trading within that daily impulsive phase. I have yet to establish my new daily week high. And the reason for this is because my internal structure is currently still pointing bullish. Here you can see my most recent bullish daily internal range with my daily internal week high up here and my daily internal strong low down here. Now, we will be taking a much closer look at this bullish internal range when we drop down to our 4-hour time frame. But here on the daily time frame, we can already start to figure out what price action is likely to do next. The current objective of this internal structure is a violation of our daily internal week high. However, you'll notice that ever since the 16th of June 2025, price action has been experiencing some bearish pressure. Now, the interesting thing about this bearish pressure is that it entered the market after we saw an internal pullback and our first attempt to generate a new internal higher high. Price action failed to violate the internal week high on its first attempt, subsequently leading to the introduction of this bearish pressure. Now, one of the possible reasons why price action failed to violate this internal week high on its first attempt is the fact that this is a new all-time high that the market has printed. And so, because it's such a significant level that aligns with a psychological even handle number, it would stand to reason that price action would struggle a little bit to come in and violate this level. Now, the introduction of this bearish pressure here could potentially just be a short little pause before price action attempts to violate the internal week high a second time, or it could be the first early indication of a potentially deeper internal pullback phase. And this is the point where I now want to draw your attention to this daily demand zone that sits at the extreme of our bullish daily internal range. If we are to see this bearish pressure persist going into the month of July, our next main area of interest from a daily time frame point of view is going to be our daily demand zone here. This daily demand zone is obviously well priced within our internal range because it sits at the extreme. And this means that it inherently offers a potential pro-trend buy opportunity where we could see another bullish rally originate from in order to facilitate a resumption of this daily impulsive phase. Remember, until our internal structure shifts bearish, which will be a violation of our internal strong low, our daily impulsive phase is still in place. And so provided we do not see the introduction of sudden bullish pressure into the market, this daily demand zone would be our next main sell target for price. Some of the things that could potentially introduce that sudden bullish pressure is our NFP news release, which is scheduled for the 3rd of July 2025. We obviously also have one or two other high impact USD news events scheduled before the NFP data comes out. And this bearish anticipation is a combination of the consolidating nature of price delivery recently, the fact that we saw price action fail to violate the internal weak high on its first attempt, and we still have a lot of imbalance left over above our daily demand zone, which was introduced into the market by the introduction of this strong bullish pressure. Now, while we have a very clearly defined sell target going into the month of July, a violation of our daily internal weak high from this point will effectively put us in uncharted territory where we don't have any previous structure to the left that price action could potentially come in and interact with to generate a reaction. This is when we will start focusing on our key psychological even handle price points for those potential bearish reactions should we see a new internal breaker structure. Now, from our daily time frame, we can drop down to the 4-hour time frame, which I regard as the internal of my daily time frame. And now we can see that bullish daily internal range a lot clearer, as it is represented as a bullish 4-hour external range on our 4-hour time frame. The introduction of that strong bullish pressure during this period led to the formation of a very large external range. We had our pullback into this 4-hour demand. We had our initial bullish rally, which tried to facilitate a violation of this 4-hour weak high. The failure to violate this level was helped by the presence of this previously unmitigated 4-hour supply zone, and the bearish reaction to that 4-hour supply at the time of recording this video has now resulted in my 4-hour internal structure going from a bullish market state to now a bearish market state. On Friday, the 27th of June, 2025, we saw the violation of this low here, which saw our internal structure shift. Now, just a very quick note on my internal structure. You'll see that I have a bearish internal breaker structure here, but then I have a bullish internal breaker structure here. The reason for that is because I applied the FTC model at this point after an internal pullback came into daily supply, tried to create a new internal lower low, but failed to do so and instead returned, violating that level. As soon as I applied the FTC model here to this large initial bearish internal range, I obviously now started following price action a lot closer, which is why my next bullish internal breaker structure is here, which then led to the formation of this bullish internal range. And then the bearish reaction to 4-hour supply is what led to my internal structure shifting bearish. Now, there obviously is no obligation for me to apply the FTC model here. I could have very easily kept this large initial bearish internal range. That would simply just mean now that when price action came in to interact with this previously unmitigated 4-hour supply, I would have seen a violation of my internal strong high. So this would represent a new bullish internal breaker structure. This would now become my new internal strong low, and this would now be my new internal weak high. So notice how by not applying the FTC model, I just have a much larger internal range. By applying the FTC model, however, I'm following price action a lot closer. I have much smaller ranges with more frequent breaks of structure, and that has now resulted in my internal structure being bearish. Now, overall, my 4-hour structure is bullish, and the overall objective for this price action is a violation of the 4-hour weak high. But my internal structure has shifted bearish, which means that I now need to start thinking about where price action is likely to go next. We have already identified that daily demand zone, which sits at the extreme of our bullish 4-hour range. But a lot closer to current price action, we have this 4-hour demand. Now, this 4-hour demand zone forms part of a 4-hour demand chain. The first POI of this demand chain is the POI that price action came into, mitigated, and generated that first attempt to violate the 4-hour week high. This means that this 4-hour demand chain is a very significant area for price. 4-hour demand here is now going to be our next main sell target for this bearish pressure that has recently entered the market. Now, as you can see, I have my internal strong high marked out, but I do not have my internal week low marked out yet. And this is because we are still trading within this internal impulsive phase. My new bearish internal range has not been established yet. So, depending on price action, going into the first week of July 2025, we could potentially see the start of our internal pullback phase originate from this 4-hour demand chain. It obviously means that we will have a very large internal range. But again, that will just depend on price delivery. If indeed we do see our internal pullback originate from this 4-hour demand zone, that would mean that we would have the opportunity to potentially trade that internal pullback to any well-priced POIs that sit within the larger bearish internal range. Now, there obviously is a scenario where our bearish internal range forms well before 4-hour demand is mitigated. In the event that that were to occur, we would still be anticipating an internal pullback into a POI that is well priced within that internal range, and we'll be looking for potential bearish continuations down towards this 4-hour demand. Now, remember, when you are looking to trade this bearish price action down towards either 4-hour demand or daily demand, remember that you are going to be trading counter trend. And the reason I say this is because your external structure is bullish. Your overall objective is a violation of the 4-hour week high. If you are taking sells in this market, you are taking those sells in line with the internal structure, yes, but counter the external structure. Now, when it comes to potential selling opportunities to trade this new bearish internal price action, the POI that stands out to me is this 4-hour supply zone here. I like this POI because we have this pool of liquidity that sits just below it. And so depending on where our new bearish internal structure range forms, this could potentially offer a potential selling opportunity down to either 4-hour demand here or daily demand here. Now, if price action violates this 4-hour demand, or if we only see an initial bullish reaction before the underlying bearishness resumes, this daily demand zone would then become our next sell target. Now, very quickly, in the same way that I applied the FTC model here to this initial bearish internal range, if we see a scenario where price action continues bearish, I would then again have the option to apply the FTC model here to this larger bullish 4-hour external range. Doing so would then see my 4-hour structure shift from a bullish market state to now a bearish market state, with this representing a new bearish 4-hour external breaker structure. This would then become my new bullish 4-hour external strong high. This daily demand zone would now represent a previously unmitigated POI where I would be anticipating a potentially short-term bullish reaction, and that potential short-term bullish reaction could potentially be enough to help facilitate my 4-hour pullback. And one of the reasons why I would choose to apply the FTC model to my external structure here is just to generate a smaller, slightly more manageable external range. And understand as well that by applying the FTC model here, our 4-hour structure will obviously switch bearish. This would then mean that on our daily time frame, our internal structure, remember 4 hour is the internal of the daily, our internal structure would now go from being in a bullish market state to being in a bearish market state. This would now signal the end of our daily impulsive phase. It would signal the start of our daily pullback phase, and that will obviously now allow us to establish our new daily week high here and establish our new bullish daily external range. By applying the FTSE model to our internal structure, not only are we following the internal structure closer, but we are also establishing the external structural range a lot sooner, because we are identifying a bearish breakout structure here as opposed to a bearish breakout structure here. And finally, to end things off here, I just very quickly want us to have a look at the 15-minute time frame, which I obviously regard as the internal of my 4-hour time frame. And the reason I want to do this is just to show you guys practically how I would go about looking for potential opportunities on my execution time frame, which is my 15-minute time frame, having now established where I am anticipating price action to go based on my 4-hour time frame analysis. So we can see my recent bearish 15-minute external breakout structure here, brought about by this bearish reaction to 4-hour supply. We have my 15-minute strong high up here, and we have my 15-minute internal structure currently trading bearish as it facilitates this 15-minute impulsive phase. Here we have that 4-hour supply, which I have now already identified as my main initial target for my 15-minute pullback phase, and that 4-hour supply zone obviously now offers a potential sell opportunity to trade in line with my bearish 15-minute structure. Notice, however, that before price action can mitigate that 4-hour supply, we will need to see internal structure shifting bullish. This is my internal strong high. A violation of this internal strong high will obviously signal the end of my impulsive phase and the potential start of my pullback phase. However, before that internal strong high is violated, price action is still going to be trading this 15-minute impulse. This means as I come in a little bit closer to recent price action, 1-hour supply here and 1-hour supply here offer potential sell opportunities to trade the 15-minute impulsive phase. And so going into that first week or two of July 2025, as we are waiting for the establishment of our new internal week low, this 1-hour supply zone is going to be my main initial buy target for the internal pullback phase, and is going to be the main initial sell opportunity to trade the 15-minute impulsive phase. And the reason I say this 1-hour supply is my main initial buy target is because I will have the option to look for potential buying opportunities to trade the internal pullback, possibly up towards this 1-hour supply. And one of the main reasons why I like this as my main initial buy target for the internal pullback is the presence of this Asian high liquidity pool here. So very interesting price delivery that I'm seeing here on gold. I'm curious to see whether this bearishness is going to persist all the way down to daily demand here, or whether price action is going to create another new all-time high. If you found this video helpful, informative, or entertaining in any way, shape, or form, please give it a like, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.